Hey everyone, it's Brian Shannon here. Today is Saturday, the 26th of October, 2013. Thanks for tuning in to my weekly video here on Alphatrends.net. Let's look at the S&P 500 and the rest of these indexes, which did generally have a positive week here. We do see, though, in the red that the semiconductors were down close to 2%, financials down about 0.25%, and those two indexes typically lead the NASDAQ and the financials generally lead the S&P 500. So it gives us reason for concern, but it doesn't give us any reason to sell short the NASDAQ because the semiconductors were down. The relationships that are often there are just relationships that are often there. They're not always there. They're not a reason to sell short. If we're going to sell short the NASDAQ, it's got to be because the NASDAQ is weak, not because something that typically leads is weak, such as the semiconductors. So I talk about the semiconductors leading a lot, but it doesn't mean, again, that we sell short. It means that we have a heightened sense of awareness. So when the financials are down, we say, okay, let's take a look. And, is it going to spill over to the S&P 500? What's the evidence say here? And the evidence simply is not there to suggesting or supporting lower prices. And in the S&P 500 this week, we saw a pullback down towards about that 174 level, and that's now a pretty important area of support is what I would think here, because we have this prior highs that did hold as support here. So I think that going forward for the week ahead, we remain innocent till proven guilty until we break down below and hold below that 174-ish area. You might make a bearish argument based on the financials or based on the fact that the volume is weak, but really the only people that I know that really think that the S&P 500 volume have meant much of anything are the people who are on TV who get paid to commentate, not people who actually trade, because that's the trend has been for several years that the volume diminishes as the market rallies, and that we're in that environment once again. The S&P 500, based on the SPY, we have diminishing volume. It's a reason to be aware. It's something to consider that, hey, well, maybe it's going up on less volume and there's less buyers, but there's a lot less supply is what it's telling us as well. Now, you also hear people often say that this is going to end badly. There's no way that this market can end well for people, and as long as you have a plan and you implement that plan with discipline, then there is no reason for things to end badly. So when we look at the S&P 500, again, this is going to be our important measure, our important level here going forward for the next, I would say, for the week ahead. And if we break below and hold below that, then there's an issue that we could see a deeper pullback. But right now, we still remain above this rising 5-day moving average. And it's my opinion that if you sell short while the market is above a rising 5-day moving average, that you're fighting the trend and you deserve to lose money for fighting the trend. Unless the evidence is there, there's no point. If you have a hard time accepting the logic that the market is up and it's only up because of the Fed, we hear that every week, but the fact is the market is up, and if you can't accept it, then just step aside. But don't do yourself a disservice and sell short the market and try to pick the top. I still get emails. It's crazy that after all these years of this bull market, I still get people saying, well, it's only up because of the Fed. Who cares what the reason is? Let's just go with the trend, and when the trend reverses, we can assign reasons for it as well. People have been trying to assign reasons why this market should decline and stay lower all year. We don't have to review those headlines again, but the pattern is higher highs and higher lows above a rising 5-day moving average. Even if we got down to 174 this week ahead, I think it would be just more of a time correction than a deeper price correction until we break below and hold below 173.75 to 174. So the verdict is we remain innocent till proven guilty. We're in a primary uptrend, and if you're going to short it, you're definitely early. So the sidelines would be better if you're looking to short the market. The NASDAQ 100, the important level in here is going to be about 81.5. That was basically the lows for the midweek pullback that we saw here on Wednesday. Looking at a 10-minute time frame, you can see that pullback came right down to the rising 5-day moving average. Buyers came in, and it's been creeping higher again. We outlined on Alphatrends the possibility that this support was going to act as resistance, and that this was a possibility here of something like this, that we would break down like that. It wasn't a game plan or an anticipation. It was a potential scenario for, if we turn lower and this market reverses, then we get stuck below a 5-day moving average, which declines, and then that could make the case for lower prices. However, there was nothing actionable to the short side because the market continued to grind higher and finished out the week with nice gains once again. The Russell 2000 is up at 111, and the all-time highs once again. I think that next week the important level will be this week's mid-week lows near about 109.70, and that's where we have a rising 10-day moving average as well. Breaking below and holding below that 109.70, perhaps we see a little bit deeper pullback. But again, it's a rising 5-day moving average where the buyers stepped in. People will be calling this a double top, I'm sure, but again, the path of least resistance is higher. The benefit of the doubt always goes to the bulls in a bullish environment. So now let's look at the semiconductors. They broke down on Thursday with a gap lower and came down to that important $40 level. Now looking at the S&P, the semiconductors, you can see we have this little trend line which was touched as well off of the lows that we saw back in September, August, September that is, and we're holding above that for now. So this week's lows also are going to be important for the semiconductors. If we break below them and hold below 139.90, then I think it's a strong possibility that we set up a test for that 50-day moving average. I would personally just stay away from the semiconductors, and again, be aware of the possibility that maybe this is indicating there's a bigger problem coming for the NASDAQ, so just be on higher alert maybe, but don't sell short that NASDAQ. And the financials, again, this is a bullish-looking chart here. We've been talking about how it's been more neutral, but it's improved, obviously, quite a bit here in the last couple weeks. You can, again, make the bearish argument that it's up on light volume, but, that, again, is really very, volume is secondary to anything. Only price pays. Price action is what pays us. If we were long, we've generally been rewarded, except for this week down 0.3%. And now what we have is a little bit of reason for heightened concern in that this prior little area of support seems to be finding a little bit of selling in here, although we finished right at the highs on Friday. This little area up to about 2090 or so, as long as we remain below that and we have this slightly declining 5-day moving average, it tells us keep things a little bit or risk a little bit, be a little bit more aware of our risk management here. But again, the daily time frame, very bullish looking. The weekly time frame continues to be bullish. The only thing that would concern me is that if we broke below and held below about $20.65. The volatility index, the VIX, I'm happy to see that that rally failed and it continues to decline. And this VXX is a broken, flawed product that really only the short sellers make money on. If you're trying to buy this thing, it's I pointed out because I don't understand why it trades 64 million shares a day, why people are so interested in something that just doesn't work. But let's not stay focused on that. Let's instead look at some action here in Apple, for instance. Apple this week did get back up to and through the highs that we saw from last year. That is the close. Last year we closed at 532.17, and this week we saw a high of 533 and change. So we were briefly positive for only the third session this year. We've only closed positive twice this entire year, the first 2 days of the year. And Apple's gotten a little bit extended here. We've been talking about, as it broke this resistance, that a rally up towards 510 would make sense. We saw some volatility in there this week, and now it's definitely gotten a little bit extended. I think that Apple is probably due for a little bit of a pullback, and I would say that position yourself accordingly, that be aware of where your stops are and that sort of thing. Anyways, I'm out of town, so I'm going to wrap this video up and try not to think about the market too much as I go enjoy some good wine. So I hope you had a good weekend, good week of trading, and enjoy your weekend. Thanks for tuning in.